Yo, what's up? So in this video right here, I'm going to explain market structure and how every single market moves. Now, the market that we're looking at right now is called US 30, but it doesn't matter what pair that you're trading. It don't matter if you're trading Forex, crypto, stocks, gold, US 30, NAS 100. Every single market makes the same patterns every single day. And the people who are able to see these patterns before they happen or while they happen, those are the ones who are able to make money. Market structure also happens on all time frames because time is fractal. So what that means is that the same thing that happens on the daily time frame happens on the 4-hour time frame, and it also happens on the 1-hour time frame, and it happens on the 15-minute, the 5-minute, the 1-minute. Every single time frame makes the same exact patterns, and I'm gonna show you proof of exactly what I'm talking about. Now, first things first, like I said, we're looking at US 30 right now. We are currently on a 1-hour time frame simply because I like to trade on the 1-hour time frame the most. But remember, this works on all time frames. Now, when it comes to the market can only go in two directions. The market can either go up or the market can go down. Now, if you've been on my lives before, you've definitely heard me pretty much say this whole thing before. Or if you watch the Trading 101 video, I pretty much went over this in that video as well. But remember, repetition is the mother of all learning. So the market can only go in two directions. It can either go up or it can go down. All right. Now, yes, it can go sideways as well. This right here is actually a great example of the market going sideways. When the market is going sideways, we call this consolidation. Like, yes, it is going sideways, but what you have to understand is that even when it is going sideways, it's still going up, down, up, down, up, down, up, down. But the reason why it's going sideways is because it is inside of this range. So it's not really moving. You will never see a market go sideways like this in a flat line. Think of the market like a heart monitor. If you ever see a heart monitor go flat line, that means that you're dead, or whoever's hooked up to that monitor, they are dead. The market is never dead. It's always moving. Now, there are certain times of the day where the market moves a lot faster than others, but that's a whole nother lesson. So if you look right here, you can see the current price of US 30, and you can see that it's fluctuating. It's going up and down because what did I just say? The market can only go in two directions. It can only go up or down. Now, when the market is going up, it doesn't just go up in a straight line like this, right? And then vice versa. When the market is going down, it doesn't just drop in a straight line like this. The market moves in waves. The market makes a certain pattern. And the people who are able to see the patterns before they happen and while they happen, those are the ones who are able to make money. So I'm going to teach the patterns to you, and then I'm going to pretty much show you real life examples, and then you can go on to the next lesson. So what we're looking at right now is the first step of the strategy that we use inside of the actual university. When the market is going up, we call this an uptrend, or some people might call it a bullish market. If you watch the lesson on candlesticks, a candle that is going up is called a bullish candle. Same thing, if a market is going up, that is called a bullish market. This is what the market looks like when it's going up. I'm going to explain it to you, then I'll show you real life examples. So the market, it'll start low. It'll make a strong move up. It will retrace just a little bit, and then it makes another strong move up. Once it makes this second move, it leaves this point right here, which is called a higher low. This is called a higher low because this point, this low, is higher than this low. That's why this is called a higher low. Hopefully that makes sense. So the market starts low. It comes down a little bit, leaving this point, which is a high. It makes a strong move up, leaving a higher low. It retraces a little bit again, leaving a higher high. This is a higher high because this high point is higher than this high point. It retraces, then it makes another strong move up, leaving another higher low because this low is higher than this low, which is also higher than this low. This is what the market looks like when it's going up. It doesn't matter what market you're looking at. I guarantee you, if that market is going up, it is making this pattern on one of those time frames. All right, now if you look to the right, you'll see a screenshot of exactly what I'm talking about. Now remember, it's not gonna look perfect like this every single time, but if you can see the similarities, then you can literally make money from it. All right, this is a screenshot from a real chart. This is a real US 30 chart. And let's actually look and see if we could find a real life example. So we are currently on the 1-hour time frame, and we can see that from here to here, the market was going up. All right, we can see that it was going up. Now I'm gonna ask you guys, can you see, hold on, let's do it side by side. Can you see how this pattern right here was happening on US 30 in real life? Hopefully you are able to see how these two patterns look very, very similar. Remember, it's not going to be perfect, but if you can see the similarities, then you can literally make money from it. Now, if you can see it, then that's perfect. If you can't see it, it's completely fine. There's a button right here that will change the way that you view the chart. Right now, we are looking at it with candlesticks, but if I click this, it will change it to a line chart. Sometimes changing it to a line chart will help you be able to see these patterns a little bit easier. But now you will see how this pattern, how US 30, when it was going up, it was literally making this exact same pattern. All right, hopefully that makes sense. So if this is what the market looks like when it's going up, then what does the market look like when it's going down? It's the same exact thing, but just vice versa. All right, remember, this is the first step of every strategy that we have inside of our university. The first step is to identify the trend. When the market is going down, we call this a downtrend, or some people will call it a bearish market. A down candle is called a bearish candle. A down market is called a bearish market. So this is the pattern that it makes when it's going down. It will start high, it will drop, it will retrace just a little bit, leaving this low point. It will retrace, then it will drop again. Once it drops the second time, it leaves this point right here, which is called a lower high. This point is called a lower high because this high point is lower than this high point. Hopefully that makes sense. It will drop a second time, and then it will retrace again, leaving this point, which is a lower low, because this low point is lower than this low point. All right, it'll retrace, and then it'll drop for a third time, leaving another lower high, because this high point is lower than this high point, which is also lower than this high point. This is what the market looks like when it's going down. Now, this is a real life screenshot of the actual market when it was going down. It's not going to look perfect like this every single time, but if you can see the similarities, then you can make money from it. I believe that US 30 is going down right now, and I'm pretty sure that it's making this pattern on one of the smaller time frames. So let's go back to the candlesticks. This is US 30 right now. We can see that on a 1 hour time frame, it looks like it's just straight dropping. But if I go to probably a 5-minute or 15-minute time frame, you might be able to see the pattern a little bit easier. So now I am on a 5-minute time frame. We can see that it started to drop right here. It might look better on a 15-minute. It actually does look better on a 15-minute. So if we go to the 15-minute time frame, I'm gonna just ask you guys, because this is about you, not me. All right, so you let me know. Can you see how this pattern right here is happening right now on US 30 in real life? Can you see how this pattern is happening right now in real life? All right, hopefully you are able to see how these two patterns are very similar. If you cannot see it, you could change your chart to a line chart. Boom. Now you might be able to see it a little bit easier. It is literally making this exact same pattern right now. All right, so this is what happens in a market every single day. The market can only go in two directions. It can either go up or it can go down. And like I said before, the people who are able to see these patterns before they happen and while they happen, those are the ones who are able to make money. So I hope you kind of learned something from this lesson. If this made sense to you, then that's perfect. If it did not make sense to you, just watch it over and over and over again, study over and over and over again, and it'll get a little bit easier for you to see it. But you just learned how the market moves. Hopefully you can make some money with this. Here at the Bridge CEO, you already know how it go. You're either gonna catch this wave or get washed up. I'll see you in the next lesson.